Alright, the next stock that I'm going to talk about is National Oilwell Varco. They're a leader within the oil equipment and services industry. It's a provider of equipment and company components used in gas and oil drilling and production operations, oil field services, and supply chain integration services to upstream oil and gas industry. It operates in 3 segments: rig technology, petroleum services and supplies, and distribution services. The rig technology, basically, it sells the components and actual rigs for the industry, both submersible, which is in water, and on land rigs used for drilling and pumping crude oil. The second part, petroleum services and supplies, is basically it services and supplies the pipelining for natural gas and oil petroleum products. And its distribution services is where it provides supplies, tools, and necessities for drilling, such as drill bits and components and parts for the rigs used for updating and making newer. Right. This is a little bit of statistics about the company. It has a trailing 12-month PE of 17.24, which is around the industry and sector. It's a little bit higher. Its beta is also higher due to its high risk return when compared to the industry and sector. Its forward PE, however, is 12.71, which is lower than its current PE of 17.24, which shows that earnings should increase in the future. It has a 1-year appreciation of 85.68% and a market cap of $23.52 billion, which is 4th within the industry. Its annual revenue is $9.789 billion, which is 5th in the industry, and its annual net income is $1.337 billion, which is also 5th in the industry. Some recent news about the company: it recently merged with Grant Prideco. It announced this in December. This is good for National Oilwell Varco because it will offer the company increase its market dominance in the drill and pipe drill bits business. The continuing consolidation by National Oilwell Varco should increase long-term returns and allow the company to have more price control over the industry. Also, they just recently reported 4th quarter 2007 results. Revenue for the quarter was up 3% and 28% year over year to $2.7 billion, which is, again, this company keeps increasing its earnings, and it's a growing company. Lastly, new orders during the quarter and total backlogs were a record for the company at $2.2 billion and $9 billion. This is the graph of the company. I'll talk a little bit about what's going on here. This first drop is due to a large sell-off from its institutions taking profits due to falling U.S. demand, which was stated likely to drive energy prices lower and could lessen the demand for oil services. However, this decline made the stock price attractive right here, and along with National Oilwell's net income rising 57% from last year and beating analyst predictions on earnings per share and revenue, this allowed the stock price to rise back up towards its 52-week high levels. The next slide talks a little bit about risks within the company. It's high risk and volatile stock, but it's also considered a channeling stock where you can buy at average lows and sell at average highs, where investors can profit highly from this. It's exposed to cost inflation on its raw materials and labor costs. It has to meet tough delivery deadlines, and it has poor customer satisfaction, which is really hurting the company right now. They should do something about that because they could be in a better position with fixing this easily fixable problem. National Oilwell Varco risks overpaying for Grant Prideco as land drillers are cutting back on orders for new drill pipeline, because in 2005 and 2006 there was a surge, and now they'll see some pullbacks within the surge of the drill pipe orders for new drill pipelines. These are some reasons why I think National Oilwell Varco is a buy. The company has a history of pioneering innovations which improve efficiency, cost effectiveness, safety, and environmental impact of gas and oil operations. It's dominant, over 60% share in the rig equipment market. A high percentage of oil rigs are nearing their 21-year-old age or older, and a driller can either upgrade their rigs or buy a new rig and components for the rig, and both of these paths lead to National Oilwell Varco. Currently, there's a huge boom in the oil and natural gas equipment market, which is positive for National Oilwell Varco to reap the benefits of this. And large consolidation has allowed for National Oilwell Varco to have pricing power, and it gives the company growth potential over other companies having lower prices. A lot of times money-hungry rig and oil pumpers will go to where the prices are cheaper, where they can benefit on their margins. And also they retain their dividends. This, unlike ConocoPhillips, who has a high dividend payout ratio, National Oil Varco has no dividend payout ratio. They retain their earnings and invest it in their research and development and their acquisitions, which is allowing them to increase their moat over other companies. Now I'm going to pass it off to Matt.